Hello, hello, hello. Welcome to another ES Futures trading stream. Today is Wednesday. It is April 9th. It is 11:27 a.m. We are about to start another period in this market. I have titled this stream "Markets in Range." I hope you understand. Now, people who has been watching these videos or people that are in the Discord, we are few people in Discord, but they understand. They will understand what is going on in the market and what's happening here right now. The video I did just 5 minutes, around 5-10 minutes ago, I did an experiment over there. I just wanted to know. I think I think many people will get the idea, right? I want to see how many people in time can get a reach to that video just because of the title. I don't do these screenshots for the picture or for the face picture of the video, nothing like that, right? I'm not interested in that. This is a business. Streaming is a business. Trading is a business as well. I consider, at least for myself, I cannot do, well, at least for now, I cannot do two or both at the same time, right? What we have here, what we have in the current market, it is, I find myself saying the same thing quite often now. It's very interesting now. Right? We have a situation in which the market has formed. Yesterday we saw the potential of the market forming a range, and the market has formed a range, right? We have 1, 2, 3, 4-day range. The market has taken yesterday's, the previous day high, which end one time frame lower and increased the also. We may start to see a range forming here right away from this thing, from this daily time frame, daily chart. We see this, right? This that can be here. I'm going to add this. I'm going to make this, and instead of doing here, let's minimize this. I'm going to do it here. We may see something. We may start to see something here. Right? And notice where this low is, right? Right there, close at the 5,000. We have talked about that level quite often in the past streams. And I'm going to call my weekly, daily, and monthly time frames charts here. I guess I'm going to do it one at a time, so you won't be confused. This is better. This is clear. Before going over there, look at what's happening with volume. Volume is slightly higher. It's starting to pick up a little bit relative to yesterday. Yesterday has lower volume relative to the past days, but it is way, way higher than these days, right? So there is a change here in this market. Right? I would consider if the market comes back below or at least around these levels, that would be low, from my opinion. But right now we have higher volumes. Okay, keep this in your mind. We will come back to this later. And the monthly, as you can see, I have added also a yearly time frame here, just for what's happening. We have a 3-month range here. 3-year range. And look at this low where it is, right? It's right here, right at this low. We have a 2-year range up here, 3-year range down here. Just keep that in your mind as well. This can be very useful down the road. Not right now, but down the road. Now the market is being bought from that high, that multi-year high. I can call this area as well. what it is. I can call, I don't have this software that can write on top of, no, but I can call this level go no go. This is a go no go, the go no go area. I started calling go no go yesterday when I was doing my homework. This is a go no go, right? This one, this area here. The market can go or be the range and go back up high. There is a significant break here. The monthly is 1 time frame lower. I am checking this 3-month range just because the market is right there right now at the low of this range. It is not coincidence now that the market is forming a range down here in this area, right, between the 52.50, something like that, 52.50, something like this, and the current lows, right? Kind of like inside this one, and that's when this kind of stair-stepping becomes relevant, right? When something like this happens, the market has no support below. This stair-stepping are areas that market uses, or may use, right? And the uses can be right like a fact, right? It's not a fact. The market may use this as areas where can find some kind of support, right? Now, the weekly, we have the same reference. Well, I have something in the upper side. There is something here that start to play, right? We have an upper range here. We have an upper range and lower range. And why I call this upper range and lower range? Because there is a clear trend here, right? It reaches a high. There's a pullback, right? And there's a breakout of this high here. It's tested again. Look where it's bought here, against bought here. You know, this is a trap here that happened. Of course, you can see that, right? Oh, I am genius. I can see that. In hindsight, everything is easy, right? But that's the reason why I call this an upper range and lower range here. We have used this also to monitor for continuation when the market was having this big break here. Right? It was relevant at the time. Again, is the market that gives validity to these references? It's not I know that. Is the market. If the market does, I can see the market. If I can see the market doing this kind of stuff, okay, this is then something the market is watching, right? When I see the market, it's the participants we have in the market. This in the upper side and the lower side again, the go no go area here, which is a multi-year time frame. And yesterday, something else have appeared, right? In the same way, I have seen this breakout from this level here. I have something similar here happening, which is the breakout, and that's why I highlighted here. I don't think, it is my point of view that the market has not made a low yet, but it doesn't mean it has to break or the break has to happen in the same way as it happened here, right? One of the reasons being that everybody knows that market is going lower, is 1 time frame lower, so I am going to trade to the downside, right? And when everybody is certain about something, got to be very careful now. You know, where were these shorts? Where were these sellers, for example, when the market was up here, right, or up here, or when the market was having this rally, this rally as a reaction to the break that happened here, right? Well, there are now here that are convinced that the market is going lower, right? And after the whole year has been retraced here, it is not unusual to see some kind of reaction the market may have around this kind of areas. Now, also in generally speaking, that's part of the market dynamics, of the dynamics of the market, right? something that comes to my mind now is one of the things that Nicholas Taleb said, or I have read in one of his books, right? In bull markets, I mean, I don't like to use that word, bull, bear, right? It kind of generates biases, but just to transmit this piece of reading, right? In bull markets, bills fall like flies, right? Fall like flies, and in bear markets, bulls cannot sustain the gains. If you have an approach, if you have a fixed mindset, probably you will be short in this market here all the way up, and the same thing happen if your mindset is to the upside here, right? All that you have gained here is lost here. I clearly remember one of my friends, and this is something also from Nicholas Taleb, right? He said that the worst kind of friendship that you can have if you're a trader is another trader, because every single one has a different point of view of the market, and if you are not clear with what you think or what if you don't have a solid foundation, you can be jumping from one point of view to another point of view, day after day. I had this guy who we were in the same. He created a Discord channel like 2-3 years ago, and we were sharing some comments there. But he did around $70,000  1 year, right? The previous year, I don't remember exactly what year it was, but the previous year he did that amount, right? And this was after COVID. It was not during COVID, but after COVID, and he lost. The next year, he lost more than that, right? He did all that amount in 1 year. He has his job. He has a good job. Did that amount and lost more than that in 1 weekend. And you can see the emotions on that guy, right? Trading back and forth like crazy, being whipsawed by the market. Man. He just couldn't control his emotions. He could make $1,000 in one trade, and right there he puts, I just need 20 more trades like that, right? And I'm going to get back to where I was. It just, at the beginning I thought it was a joke, but he was serious about that. The next thing, he lost another, he lost 1,000 plus something else, something more. That's whole. I mean, that shows. I didn't understand at the time, but that shows the lack of foundations. Right? Lack of understanding market dynamics, and that can be very dangerous. Very dangerous. Markets change all the time. Markets are evolving all the time, and we need to evolve and change with the market. All right, stop with all that nonsense. Let's go to daily chart. Right? Now, the daily will have this range. I have transposed all the marks, all the reference from the weekly, monthly to the daily as well. This little trend here. Come on, man. I am going to pay attention to this thing. Another reason. I don't usually do this, but what I'm doing this is because of this number here, this 5,000. If the market takes this one out and has some down station, I will start monitoring this low, because this would be the ultimate destination of this trade that I started yesterday, actually. I hope you know what I'm talking about, right? But patience here. We need to have patience here. Do I know that this is going to stay? I don't know. I have just put this line 5 minutes ago. You have seen that. Now, here comes the interesting part. We now have market profiles here. If I open this day, which is yesterday, no, before yesterday, okay, I have seen, look at this, we have talked about the 45-degree line. I have a 45-degree line potential trade here. Right? This is very and again, this is very tricky here. It's very subtle. It's not easy. This is the first time the market takes the 5,000, takes here, and start to buy from here, from these levels. There is some, and this is the trap being set here. This is the trap being set. But I said quote unquote trap for that day here. This was an unbelievable day. Every time the market comes to this area, we talk about now traders have an area that can use as a reference, right? As a potential area that can tell you, you know what? This is it, right? If the market takes this low out, I'm out. And that was this area here. Very questionable. I didn't do anything here, but I did do something the next day up here. I was underwater a good amount of time here. But when you trade the options, the market, and this is the thing, right? With this volatility, the market can reach, I mean, how much? How many points? 40, 60, 70, almost 60 points, right? Away from my position. But my option was underwater just 2 points. Right? 2 points. And that's why I say it's very hard. This kind of volatility is very hard to trade with straight futures. And something that I am noticing here now in this market, this is more like a market. How can I say this? That how it used to be. For example, before retail pile on in these markets after COVID, right? When many people started work from home, right? When there was a free money, when the government was sending money right and left to everybody, right? Kind of the dynamics are changing. The dynamics are changing in this market. This is not the same market as it was a couple of weeks ago, and for that fact, the same market that last year. It's a different market now. That's something I have noticed. Now, as the market opened, or as the market developed yesterday, we have the tempo here was really, really bad. It was really bad, really bad. This market needed just one, was ready for have one tweet or one news release to rally, to have an unbelievable rally when it was a short-coming rally, when it was breaking. It didn't happen. Notice how value was not moving inside previous day. So value is higher. Now value is lower, overlapping lower. It's not lower, it's overlapping lower, but if you look closer, what you notice is we have value around the center of the range. If I put these three profiles together, I will have something. Or we will see something like this, right? Something like this. Right? And this being the center of this range, of this 3 or 4 day range now. Now, this area here, I'm going to do a screenshot. I think this is going to be very useful now. Okay, this is window trader. This area here has a bunch of stops. The weak longs were shaking here, and after that the market has a rally that did not take this high out. It closed. It was unbelievable to see how it closed at this gap here, significant gap here. And the next thing is closing the gap up here, right? Of course it's going to close the gap. Okay. It was easy to be caught with that. This was something here. Now, what is happening, what I'm noticing right now that is happening, is the same thing that happened here. It is happening now again. How many lows we have here? Or we had there, right? We have, let me check, let me erase this thing so I can, we got 1, 2, 3, you have 3, 4, 3 here, maybe even 4. I got 2 here, 2 here. Well, while the market was going this thing. Now, how many we have now? We got 1, 2, 3, 4. The same thing. The same thing that happened a couple days ago is happening again. And now it's even more risky. Right? Now it's even more risky because it's happening, it's like a copy and paste of what happened before. I didn't do anything here, but I was watching this, right? And it led me to something that happened afterwards. I'm not saying that's going to happen again. Today, I have noticed, based on yesterday, for example, we have 3 distributions here. And market has to deal with all business first. We have an overnight that is 100% short, then was short, but we have these distributions here. 1, 2, 3, right? We have a spike. The market has this spike. And the spike is something that happened too late in the session for the market to have to do something about that. Right? And I noticed the market has a spike here, late spike yesterday. And I label this as a spike base. The market opened. Many things happening here, man. Many things to be aware of. It's not by any means this is easy. No, this is very complicated. It's not easy, but it can be read. No, we have this upper range here. We have the whole range of yesterday, and we have the whole 3-day range yesterday, and a spike that happened in kind of like around the center of the range, right? Kind of around the center. If this spike would have happened here to the downside from here, for example, that would have been different, right? This is the market is still inside previous day range, and the market opens inside previous range. Not just inside the previous day range, but opens inside the spike. It doesn't open below the spike. It doesn't open above the spike. It opens inside the spike. That's neutral. That's the market delivering information there, right there. Right? Odds of something happening. The odds on what's that thing that can happen is a rotation. The odds of rotation increases when the market opens inside previous day range. Right? And the one thing the market does is opens and shoots way higher. I was highly dubious of this spike at the opening. I'll tell you why. I was highly dubious of this because it opened right around this level, right? just there. It cannot be more exactly. Peaks at 50%. This the peaks can open up here. This market can open up here or down here, and I will consider that being exactly at this level with that volatility, right? And it is crazy how this market has stopped, for example, almost to a tick at this 17.5% reference on the upper side. It is stopping at this mechanical reference every chance it has. It's stopped at saddle, was moment in time comes to saddle, comes to last, and what do we have here? All right. Remember that I told you to grab to that little piece of information when we were checking the bar charts. The 5,000 was a level. It has nothing on it, man. It has nothing. It has no relevance whatsoever. It means nothing. It is traders that give those magic zeros, right? Just because it has a bunch of zeros on the right, it possesses magic for traders. The market is going to bounce from here. The market is going to break from here. The market is going to rally from here. This is it. Right? I got the trade finally. Market is doing nothing. The market so far, since the market has opening, this has nothing. I have seen an opportunity here, but it didn't happen. It didn't happen in the regular trade or hours. Okay, it happened during the overnight. And when it was when the market, okay, sold from exactly to the tick 5,000. Now it's very hard to take this trade, right? Being down here and take a trade here, because you can see the market going lower and lower and lower. We have gaps that have been in the past 100 points, 200% points gap. We are going to have same kind of gap now, right? I haven't opened since the opening. Since I come back to the trading desk, I haven't opened this profile. I haven't expanded, but you can see here I can consider overnight inventory, even though it's below settle, it's fairly rebalanced here. Now the amount of the trades, you can see how these shorts are squeezed here, all these longs are liquidated here, and we have these two periods here. The amount of volume that you have in these two periods compared to the rest is minuscule. This is fairly bad. I haven't seen. I didn't pay attention, to be honest, to the overnight. To the overnight. I did today at least. I didn't look too much at the overnight profile. This is what I'm watching now. All right. But the thing is, traders have seen volatility here in this market. Wide ranges with bigs at 50%. I expect 7% ranges, 7% ranges, and that is 250, 350 points between the high and the low. Look at where this range is. From here to here is very narrow range. Very narrow range. Right? The market has found an area where two-way trade can take place. Can that be an assessment here? I think this is a very risky environment right now. Narrow range, this kind of ranges, especially with this kind, it can be in any volatility, but if you see, when I see, again, let me call this daily time frames here, daily charts here. When I see the range, look at this range here. Look at this one. Look at this one. And look at today. It has to be. You have to be able to observe that thing. This is a nuance here. This is a narrow range that we have now. A narrow range can provide opportunities here. Maybe not today. Yeah? Maybe with this range, if this range ends like this, that will be something really crazy happening here, right? Something good or something big can come after here to the upside or to the downside. Because it's a narrow range, tremendous amount of volume being accumulated at specific areas, right? And when you know the direction of the market, you know what's happening with the market right now. You know surrounding circumstances, and that something can happen out of that. What's going to happen? I don't know. I have no idea. Today, have just before the stream, I had opened my trading, my options board. I have no intentions to do. I haven't looked at the prices here because I don't see anything here. This high is not good. This low is extremely risky here. We are around the 5,000. Market may take. I give this low odds or remaining throughout the day. Probably is going to be taken at some moment in time. But look at this high as well, right? We may see something here. Whatever happens, if any, no, I still have a bias to the downside. But I think the market is forming a range here, and Jim says this over and over and over, right? If you have been watching him, you will understand this by now, because he says this all the time. Markets in range are markets that are looking for more information before its next directional move. We have now FOMC, which I don't think there is going to be relevant or relevance today. We have CPI tomorrow. We have banks. I think banks are starting to report. Let me check. Banks are starting to report. Yeah, I got the 14, Golden Sachs, Wells Fargo, Schwab, Morgan Stanley, JP Morgan. Yeah, the early session is here. Bank of America next week, right? Officially, we are getting into the early session. That can give us some insight, right? That can give the market the information it needs before its the next directional move. Now, we're still days from that, and it's not coincidence. I believe that the market is in this range now. Let's check now. And this is very, look at where these big tech charts are. Right? Amazon, I mean Apple. Apple has an unbelievably long liquidation here. This I don't think this is true support here. I think support is around 150. The market has traded, this Apple has traded a long time, right, around this 150 level here. This gap has been closed. I wasn't following Google. This is Amazon. Microsoft can find support around 330, maybe 310. But you know, it is it's no coincidence why we have earnings here very soon. Look at what this is very weak here. Netflix is very weak. Look at what Netflix has below this low. I was bought mechanically from this area here, but it has nothing here. Nothing here, all the way down to here. Otherwise, to what is that, 700? But I think this can hold here for a while until a split happens. Probably the split is coming for Netflix. Same for Meta. Right, and that will give you a trader some reason to buy these things, right? A Tesla is something I say I wouldn't touch this stock here. This can have a big swings here, and this is something that traders love to watch. You know, what is these formations, right? This is Tesla. These formations. It remembers me of this friend, you know, this guy that the one I talked earlier to. He called this traders call this this is head and shoulder, something like that, right? This is a self-fulfilled prophecy here, but this guy made me laugh when he comes with a name for this. This is the market giving you the middle finger. This is the middle finger. Pattern. This is just I can't avoid to laugh. Remembering him saying that. I thought it was fun. All right. This is something that can happen in Tesla. Yeah. Particularly Tesla. Tesla is I think Tesla now is like this stock is like Bitcoin now. And what happened here? This is an area here. This area around the 160, 150. Again, I say that this stock is worth 50. 50 will be really good number valuation for this stock. But I think Tesla has may have something similar to Bitcoin and Budweiser. I think that happened to Budweiser, which is an appeal, right? Many times you don't evaluate what you have or how strong your base or your support is until you lose it. And that's it, the sentiment. There was a lot of sentiment that behind when you don't respect your consumer base, something bad can happen after that. That happened to Budweiser after that when they did a commercial with this guy or this gal, right? People just went crazy, right? And you know, the support that was there was not such a thing, such a real thing, right? Because they quickly switched to another brands. I guess Corona is the most drinked beer now, and they have took that market share from Budweiser, and to recover from that, I don't know how long. Maybe how long that can take. A generation, maybe. Who knows? Right? Nobody knows that. And the same thing can be happening for Tesla now. I wouldn't know, or we will not know that until after the fact, right? Because Tesla has a big support in one sector of the population and wasn't accepted by others. but what his CEO did was just, disrespect that, assuming that is untouchable, that they will not move, right? And that appeal, that I think that appeal is something that that can be lost really quick and really hard to recover. I think that's what Warren Buffett calls mood, right? When he talks about Apple. But Apple and Tesla are two different companies. Right? The consumer base of Apple is just insane, man. I guess I am the only Galaxy guy in a group of, for every 30 people, there is only, I can find one Galaxy, right, one Android. Right. When you ask these people, these guys, ladies and gentlemen, why they choose Apple, most answers are because it's just because, right? It has this appeal. I like Galaxy, I like Android because it is better for me, for what I do. I have been using electronic payments way before Apple introduces his electronic payment. Before phone payment was a thing, right? When these card readers didn't have this touchless for phones, right? Now you have a little thing that you can pay with your phone, with a sign there, right? Galaxy started that with the old machines. This old machine, you just have to put your phone, in this case my Galaxy Note, I had to put against the magnetic strip, and it worked. And the cashiers was just baffled. What happened here? I didn't see you sliding your card, right? I pay with my phone. That wasn't a thing. But as soon as Apple was introduced that, and that was a Samsung payment. Have you heard of Samsung payment? For example, no, right? Samsung introduced that to the market. They don't have a share. I don't know what the share of the Samsung is in the payment, in that kind of payment, but it is very low. Has to be very low. Most of the share is I believe it's Apple and Google Payment, right? Or Google Payments, right? Google Wallet has to be one of those things. Well, Apple Wallet, I don't know what they call, but that's the most used now. And that's the appeal that this company has, right? Somebody else can be doing this, but as soon as they start doing it, it becomes a thing. Right? That's what Warren Buffett calls mood, if I'm not mistaken. Right? And having these markets at these levels here kind of gives me an idea, right? And I check again the daily, weekly, monthly, where the market is. It's not a coincidence that that the market's forming a range right before earnings, right? We may see some back and forth here. Something that was, something else here is, what is this? NVIDIA. I want to know what is this? MicroStrategy. I want to see what MicroStrategies is. What is MicroStrategies? Tick. Come on, man. What? What is the tick of that company? MSTR. Okay, MSTR. Why? What? MSTR. Right here. Is this? No. No. This is not. Well, I wanted to call this. Oh. Okay. Yeah, this is the one. Right. This is a company that uses Bitcoin. The way how I guess Michael Clay. I don't know what's the name of this guy that has. But this is the prime example of the company holding built on Bitcoin here. I guess if Bitcoin comes below 50, this is the first company that is going to go out of the market. And the way how they work is they use the bank system to buy Bitcoin, and then use the Bitcoin they have bought to guarantee new loans. That is a really dangerous scheme, dangerous system, which is really good as long as, when everything's going fine, it just goes. It can't be better. But just wait until something happen, and this will take this market down. I mean, this I'm talking about this market, right? Along with banks that are helping that, because with something like that happens, it can create a chain reaction. What has helped now is that now we have trust funds, you have ETFs based on Bitcoin, and they can do some sort of hedging now. So some risk has been taken off now here, but still, it's still a system that has been proven that works for a while, but when it stops, it can be catastrophic. No. Let me close these guys here and go back to the market. This market here, right? The risk here, the risk I see here, what the market is doing, for example, now. The market is trying to take this range out, this one, Success, we see the market closing this distribution here. How good are the odds now of moving POC higher? We have a rotational day with extremely questionable low. This is a questionable low from yesterday. This is a very questionable, finite low of 4.9. I don't know why I call 5. This 4. Very questionable. Final low. Let me lock this down. Okay, I'm not doing anything here. I'm just seeing that I am just trying to state here is the risk that the long has here, and I base my trades. To allocate any kind of trade, one of the first things I do is assess the risk here. I think the risk is high, very high on the long side. It doesn't mean the market cannot take this high out. I'm not saying that, but there is many things in that are not playing against in favor. One is this 5,000 here, right in between. The other thing is the market opening inside the spike, right? That's neutral. The mechanical selling on this spike base once, twice, right? What traders are trying to do here from relative to from this to this area is the same thing. There's another group of traders that aren't doing that, but they are using the spike base here on the upper side. Now, so you can see that the dominant force in this market now is very short time frame trading. Now, even though the volume kind of remains a little bit higher, about the same as yesterday, higher relative to what used to be, right? We used to have, there used to be a time where when 4 millions in the composite volume was high. Right? Now 4 millions is just, it discontinuous. 4 millions is would be just a standard, okay? Just a standard. I don't have more to say here, no, other than rotation. I haven't seen an opportunities other than the one that I mentioned from the overnight, which I did not take. You know, I went to rest. I'm not willing to leave anything there, you know, without being able to monitor the market. Basically, we have a trend, we have a range now. We have a range, and tomorrow, if anything comes tomorrow, I will keep paying attention. Notice what can happen here tomorrow, right? Uh-oh. Okay, I didn't mean to open that. I wanted to open this. If anything happens tomorrow, if this trend is to be established, notice where the low can be. Right, this time the low can be above 5,000. That's very typical of short-term trading. Huh? Now the 5,000 has been taken, it comes back. Now it's buying above the 5,000. So this level stay. This is it, right? That's the first thing that can. What I'm trying to do is trying to get in the mind of short-term traders here. You know how they can think about that. Value is overlapping lower. For value to be moved inside yesterday's, we need a rally here. We need at least trading up or inside here. There's nothing up here that can that I can use, right? That I can use to monitor any rally, or I can use as a reference here. Where's hardback here? This is hardback. This is overnight hardback. No? Alright guys, unless you have any question, I will be calling it a day today. Sorry I didn't have more to say. There's nothing for me to do or to say, nothing else to say about this market. I haven't seen, this is a rotational day here. I don't have anything here for this market. All right. The one thing before I leave, the one thing for this kind of days is if this range, okay, if this range remains, it can take that can happen late in the session, but it is not unusual to see a breakout of this range. It can be to the upside, it can be to the downside, right? But this kind of range, very narrow range relative to the previous days, are or can bring some good opportunities if we have patience. If you have been trading here in this environment back and forth, especially if we are placing multiple trades here back and forth, as the day develops, you get tired, right? if you have losses, you may see something, but may not be able to trigger the buy or sell, right? Because of what happened before. If you have many wins, short, small wins, you may become overconfident, and if the market moves against you, you may have the tendency to think that, okay, the market is wrong. I was right all day, and now it has to be in this direction. I am right now. I am right. I have been right all day long. No, the market is wrong now. Right? That kind of things can happen. One of the things that I always say, right, preserving mental capital is as important, sometimes even more important than preserving. I consider the same, right? Preserving financial capital here. Okay, I wish you guys a good rest of the day. Stay safe. Hope I can see you tomorrow. Bye-bye.